Well, it looked like everything was going okay this week until we hit Friday, and that's when it all fell apart. Let's talk about where the market's going this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap. We are Riz International, and we are a group of people who want to help you grow as far as being a trader. We want to help you advance, get past all of the BS, all of the lies and misinformation out there, and just give you the truth on what it's really like to trade in the market. And man, was Friday a crazy, crazy day to say the least. All I can say is I'm reminded of the line from Ron Burgundy, and it is basically like, well, that escalated quickly. That's pretty much what Friday was like in Power Hour. It was ridiculous. It looked like we were going to hold above our support line of 36.40. We had bounced off of it multiple times during the day. We'd come down, we'd go back up, we'd go even higher, then we came back down. It was a roller coaster ride on Friday until it all fell apart in the last hour of trading and the market just took a poop. Absolutely shit the bed, as Riz would say, and yeah, it was absolutely crazy to watch that go. Let's take a look here. Let's see how far down we are now from where we were at the highs, approximately a little over 25%, down from the highs, which we hit last January. It seems like a decade ago when we hit the new all-time high on the S&P 500. But yeah, we are in a solid downtrend here. We've pushed down below 3,600, which was a critical area. Riz says that we're gonna be keeping an eye on that, and man, when it broke hard. Now, there is a lot of potential here for a bit of a relief rally. We saw this on Thursday here with this nice push, and then, Wednesday rather, and then Thursday, Friday were both red days, but man, we are oversold on the market at this point. Now, one thing I want to remind everybody of is that these are just indicators. They are not set in stone. As you can see, things can go below oversold and stay there. It's happened before. Here's some here where it was stayed oversold for quite some time before we got a rebound. Understand that this is just one indicator, one tool in the toolbox, and it's something just to look at to get a general idea of where we're at. Now, that doesn't mean that we might not see more selling on Monday. If we continue to bleed with everything that's going on, with all the escalations going on in Eastern Europe, and everything going on here in the United States with Hurricane Ian, of course, and of course all of our subscribers and members in Florida, we do hope that you are safe and that you are okay there in Florida and you weren't, hopefully not, in the path of the hurricane. But there's a lot of downward momentum on the market right now. Now, I'll say we are very extended. We are very extended past the moving averages here. We're oversold. This does look ripe for a bit of some buying, some dip buying going on. But this huge sell-off into the close on Friday is very disconcerting, to say the least. It seemed like support was going to hold on Thursday. We came down and basically closed right on top of it. And then we gapped below it on Friday, and if you were watching Friday, you were on the roller coaster ride with all of us. But yeah, it was a big battle, honestly, between the buyers and the sellers, and it looked like the buyers, at least early on, were going to be able to push it higher, but it just wasn't meant to be. Sellers got a hold of it at the end, and that was all there was to it for Friday. So keep an eye on things Monday. Let's see where we open, of course. We'll be keeping an eye on futures Sunday night. We'll post that for all of our elite members in our Discord chat so that you're aware, to get kind of a barometer as far as what's going on in the market, at least going into the open on Monday. Let's go ahead and take a look here at the breakdown for the S&P 500, and basically everything is down except for energy. Utilities have taken an absolute dump from where they were earlier. Before, we were in the positive, but these last few weeks we've been seeing a lot of drawdown on utilities, and now we are down below the zero line. Energy was starting to sell off pretty hard and had a nice big run up here. I'm surprised that we didn't see more of a dip, honestly, with the hurricane, but holding steady here right at about plus 25% on the year. Everything else is below the zero line. SPY, S&P 500 ETF looking at negative 25% so far. As we've had for most of the year, real estate and tech are pretty much underperforming the S&P 500, at least in the last few months here, since about mid-August. Tech, of course, has been getting hammered this month and this year, all for the most part. All these growth stocks are just getting slammed. Healthcare is and financial is just slightly overperforming the S&P 500, but still down. As I said, utilities taking an absolute nosedive here, and energy just kind of hanging tight. Let's take a look here at oil. Oil's still in a massive downtrend, really pushing lower. And of course, the hurricane is probably going to push that even lower. Also, we're going into the winter months, so we will have somewhat of a little bit of demand destruction. We saw that earlier with the price of oil being so high, currently sitting below this support level of 85. We'll have to see if that becomes resistance in the future. We have had multiple tests here earlier this month, and we weren't able to push over it. Of course, there are a lot of extenuating circumstances going on in the world, and with OPEC and things like that, we'll, of course, keep an eye on those things and let you know what's going to be going on as far as OPEC announcements and things like that, of course, for all of our elite members. Gold has been honestly the most surprising thing to me so far, pushing down below long-held support of 1680, and we had several attempts at it last week. Looks like we're kind of grinding back up towards it. We'll see if we can get there, when the markets open, but gold looking a little bit bearish right now with the market absolutely not behaving as a hedge as it has in the past, and really kind of just tracking the market in general, honestly. Of course, we do not have positions in either of these right now. Oil is really just not giving us a good entry at this point, and we continue to wait for that right moment to go ahead and jump on that. But really, really huge downtrend on oil at this point, and gold as well. We don't hold anything in that. Another asset to take a look at is Bitcoin. Bitcoin getting absolutely smashed as of late. I think we all know this. I feel like I keep singing the same song as far as Bitcoin is concerned, but do look, we are starting to approach this downward resistance line that we have been on. Now, this, of course, is just a trend line, but it has held pretty solid over the last, well over almost a year now, since we hit the highs last November. So just short of a year, we have respected this line so far. We'll have to see what happens when we get there, but there is a lot of downward momentum right now on Bitcoin and crypto in general. A lot of uncertainty, like I said, especially with things going on in Eastern Europe and just with economies in general. There's a lot of, we'll just say shenanigans going on right now. And so that's something we're keeping an eye on. But yeah, Bitcoin is just languishing right now, really just kind of hanging out between 20,000 and 18,000. And as Riz said last time, if we crack 18, look out. We'll have to see what happens as the 50 moving average here, which is the teal line, continues to kind of drift down. As it starts to dip below 20,000, that will be interesting to see how Bitcoin reacts, and also when it comes to this resistance line. I did get some questions from our elite members for some tickers to take a look at. Let me go ahead and pull those up. For everybody who's here live, go ahead and post in the chat what you want me to take a look at. But I got 3 tickers to take a look at from Anton, who is from Odessa in Ukraine. So, Anton, I do hope that you are safe, brother. Let's take a look at the 3 you wanted me to take a look at. O was the first one. Realty, oh boy. This one's getting hammered, to say the least. Let's see. He wants to see if we're somewhere near buying levels for a mid to long-term hold, in my opinion. And that'll be for the next 3 tickers. So let's take a look here at some historical data. Now, this is interesting. I don't know this one off the top of my head. Obviously, this is a income. This is a REIT. I can tell by all of the dividends here. Definitely a REIT, to say the least. REITs are great for residual income. Obviously, a nice 24-cent dividend about every month? Yeah, every month. Pretty nice, to say the least. So that's definitely one thing that you can look at to buy and hold. Obviously, we're not at the all-time low here. That looks like it was about 36-ish. We'll just say 36 and a half, just eyeballing it. Let's see. Are we kind of sitting around? There's definitely some more downside potential here. As far as technicals are concerned, but this has been getting absolutely wrecked. And we have earnings coming up here fairly soon as well. If you're looking to buy and hold and you want to take a starter position, I think this is definitely a great spot to do it. Way oversold, to say the least. could be in the market for a bit of a rebound if people get a hold of this. And of course, that nice dividend is pretty nice as well. Looks like we just missed the last one. So that's a little bit unfortunate for holding on, waiting to get in that. So this one, if you have a long-term perspective on this and you want to get some dividend income and things like that, definitely a good one to buy and hold. I think you could average down a little bit if you wanted. Later on. But yeah, this one seems pretty decent. Not a terrible spot to get in. We are kind of, admittedly, we're in no man's land at this point. We're kind of between, support levels here. Let me go ahead and throw a few up just from what I'm seeing. We got something going on there, something right about here. Yeah, that seems pretty good. So, I mean, there is some more downside potential here to this, but if we see a strong rebound in the market on Monday, it could be a good thing. With the market going down as hard as it did, we didn't die here on Friday. So that's a decent sign that is holding this 58 area. So I think this could be a pretty decent spot to get in if you don't mind holding longer term, or if you're considering possibly averaging in. Next one he wanted me to take a look at was KMI. So Kinder Morgan. Let's see here. This one I'm not as jazzed on. I mean, we are kind of sitting here near support and kind of consolidating. So that's, generally a nice signal that we're holding this level here. Of course, like most everything, we're very close to oversold. Not as close to the other one. The other one was way oversold. This one's just kind of, we bounced off oversold here. It looks like on Monday or Friday. And yeah, that was Monday. And bounced a little bit. It's not terrible. I like the other one better. I like O better as far as a dip buy opportunity. This one, doesn't seem to move all that much, so we're not going to get as big of a, a move here. Obviously, we kind of died here in 2020. That's the COVID crash. I said the word. There we go. The YouTube overlords will punish me for that. Again, we're just kind of holding this area, and it doesn't like to move as much. Dividend, looks like we've already missed it. About the same as the other one, as O. I like O better, honestly. This one just doesn't move as much. Kind of a lower dollar stock, so obviously you could take bigger size, but I feel like the risk is higher on this one. There's definitely more downside potential, I would say, on this one than there is with the other one. So this entry here on this one is a little dicey. It's not terrible by any stretch of the imagination, but it's not amazing either as far as looking at the historical data. So this one I'm not too jazzed on. Let's take a look at the last one, which is T, which is AT&T. This is a classic. Oh boy, AT&T getting absolutely smashed here. Now, AT&T in the past has been one of the, apparently I've drawn quite a bit on this before. Let's just take these off, shall we? Not sure what those lines were for, but now they're gone. All right, cool. So in the past, AT&T had been a pretty solid dividend stock that people would often like to hold for that. But, it's not at a terrible location for a dip buy. Obviously, it's getting wrecked. Yeah, we haven't been this low in a while. Looks like the last time we were here was in 2002 and 2003. So that date is pretty much irrelevant. Let's just call a spade a shovel here. This one I'm not as jazzed about either, honestly. AT&T getting absolutely wrecked for the most part. Even when we bounced here before, it was not as big as a bounce as you would hope. Obviously horribly oversold at this point, but I'm not sure how, what AT&T has going for it. Obviously earnings and revenue have been good. So, I mean, from a macro perspective and from a fundamental perspective, I think it's okay. But yeah, I'm not liking this one as much. Out of the three, O is my favorite. So that's the one that I would look at. And then Dylan had three of them that he wanted me to look at. He wanted me to look at three of the big boys. Let's take a look here. Amazon. All right, so Amazon broke down here last week below this, this pushing upwards, but earnings have been kind of bad post the C word. As far as that's concerned, of course we had the split here. Didn't quite behave as like we expected. Honestly, we expected more of a buying push with after the split, and we didn't really get it. We did get it more here post earnings, where apparently they missed earnings, and so they gapped up. Of course, that makes sense. And then it's really just been in a sell-off with the market of this hard bounce off the 200 simple moving average here, and has been kind of going in. Now let's see. Dylan just says, just wanted me to review it. Okay, so as far as an entry on Amazon, I'm going to have to hold off on this one. I know Riz talked about this one last week, if I'm not mistaken. So if you want to get Riz's analysis of this from a week ago, go ahead and watch last week's webinar. We are kind of holding here in this area, and we do have some support here around 100, but that's a big dip below 113 as far as an entry is concerned. We're just kind of consolidating in this area, really not too much movement yet. But this push below support is a little bit concerning in my opinion, but you know, it's just a trend line. It's not gospel, as much as I would like to think that my trend lines are gospel. Sadly, they're not. You know, Amazon, I'm not too jazzed on. Of course, with everything with supply chain issues and things like that, may give Amazon a few more issues, if you ask me. So I would hold off on this one. I honestly feel like there's more downside on Amazon. I feel like we could come back here and retest 100 if the market doesn't bounce, you know, here fairly soon. Next one's going to be Apple, which of course is the biggest one. Holy cow. Apple getting absolutely destroyed. Of course, everybody calling me and texting me while I'm on webinar, but I'll call them back. Sorry. I got my team here we got to talk about. So Apple getting kind of blasted here the last couple days, which is not surprising. If you look at the S&P 500, of course, Apple holds the biggest portion of that. So as the S&P 500 goes, often so does Apple as well. And Apple can, you know, kind of push the S&P in some ways, not, you know, completely, but let's be honest, it holds the largest market share in that, you know, in the S&P 500. So Apple getting absolutely wrecked here with the market, with issues with chips and production and things like that. I'm not sure how iPhone sales are looking for the new 14. I'd have to look into that. That's not data I have right in front of me. But man, that's a hard break below this 150 support area that had been holding up pretty decently and had been behaving, you know, somewhat as a bit of a guidepost for Apple. Yeah, I'd want to see what happens on the market on Monday before I would consider taking a position in this. If we see a relief rally, we should see Apple go up in theory. If it is possible that Apple could continue to sell off with fears of chip shortages, and of course military exercises in the Taiwan Straits are always concerning for companies like this that utilize a lot of chips. So that's something to keep an eye on as far as something a little macro oriented, but yeah, definitely not a nice looking chart here for Apple at the moment. And then of course the last one's Google. Alphabet. Yeah, okay, I feel like a broken record at this point. Huge sell-off, oversold territory. Could be a decent spot to get in. Now, of course, I might mention with all of these big names, you know, there was we gave you some guidance as far as when it's time to possibly deploy capital, when it's not. Of course, all of our elite members have that. These last three tickers, I can promise you, have all been on that list. So just make sure that you guys, for all of our elite members, are following that and keeping an eye on it as far as places where you can get in. So that's good. Okay, so we looked at, I'm looking through here. We got a lot of questions. Just refresh your browser, Ricardo, if you're not seeing the screen. All right, Nick wants to look at Google and Meta. We already looked at Google. Let's look at Meta. Yep, and we can do SQ after that. So Facebook, I'm always going to call it Facebook, guys. It's always going to be Facebook to me, but okay, Meta Platforms Incorporated. Getting kind of wrecked here, and honestly, I'm not a huge fan of this right now. I'm not seeing a lot of much of anything coming out of the platform at this point. You know, the Oculus hasn't really panned out, in my opinion, all that well for Facebook. Of course, I understand they want to start their metaverse, blah, blah, blah. But, you know, they really have not recovered from these earnings here back in February, earlier this year. And they've really just been in a downtrend ever since with the, you know, the sell-off in tech and things like that. Meta's getting sold off as well. For a longer term position, I wouldn't I don't hate it here. It's not a terrible spot to get in as far as long term, but if you're looking for a short term swing, I don't think this is something that I would look to swing short term, just based on its behavior here since the beginning of the year. For the most parts, I just don't see much coming out. I see fewer and fewer subscriber numbers from Facebook, from what I understand. They're not getting the new users that they need to keep the platform going, and people are basically moving over to TikTok and other platforms that get around some of the BS that Facebook has going on. Fact check that, Facebook. But yeah, I'm not a huge fan on Meta right now. Even this earnings apparently was bad. Yeah, so they're losing revenue here now. Of course, 28 billion, nothing to shake a stick at. And I'm sure Zuckerberg's doing just fine, throwing people in Facebook jail whenever he feels like it if he doesn't like what they post. But I just don't see a lot coming out of Facebook unless they make some big announcement and make some new innovation. I'm not really seeing too much. And maybe we'll just all go back to MySpace, or maybe we'll find something different. Let's take a look at SQ. Another favorite here from Riz International. We have traded SQ quite a lot in the past. Yeah, SQ, again, I feel like I keep saying the same thing over and over again, but SQ just getting wrecked here with this sell-off in tech. SQ, obviously we're sitting here kind of on this support area here right around 55.25-ish. Though we did close slightly below 55 on Friday, which is not always the best sign, but not terrible. Let's look here. Yeah, I mean, we had a huge, run up here, in 2020 with everything going on after the thing that happened in 2020. And obviously, SQ did really well from that, but really has not come back since then. It hasn't even come close. The 100 rather, the orange line here, proving to be very difficult for the stock to break through at this point. So I'm going to say hesitantly hold out on this one. Let's see what it does. It could be a decent spot to get in if you want to get in something really small, just to, kind of dip your toes in, see where it goes. But if we see continued selling like this, obviously that could turn into a long-term hold really, really fast. So that's a little unfortunate. But yeah, SQ, again, I'm not seeing much coming out of them. Even with decently good earnings, it wasn't able to push over that 100 moving average, and we continued to sell off. So there's a lot of things that are really oversold right now, and I think that's really kind of the overarching message tonight. It's like you're going to see everything looking oversold for the most part. We're looking at different tech stocks. We're looking at REITs. We're looking at what else? We're looking at AT&T. We're looking at all different types of questions tonight from guys from tech to all different sectors, and everything is oversold because the S&P 500 is just getting absolutely destroyed lately. And so it's really hard to try and catch the knife. And that's really what all of these questions have in common tonight, is everyone is trying to catch the knife. And I get that. My recommendation, my suggestion to all of you is be patient. When you try and catch a knife, oftentimes you get cut. And it's a good way to get stuck in a position and be holding for a lot longer than you want, and then miss out on other opportunities because you had too much capital stuck in any one security that you tried to knife catch. If you want to try and do a knife catch on something, do it on one or two max, make it a small position so that you can average down later if we see continued selling in the market. We may see a rebound from here. It's possible, especially if we push over 36 in the morning. On Monday, I could, see I could be convinced that if we can push over 3,600, we could see a larger push north on the market. Now, we're not going to get back to 39 or even 37 very quickly, in my opinion. It could take some time, but in my mind, I still see more downside. I know Riz was talking about looking here at about 35 is kind of where he's expecting things to end up. Of course, there's nothing set in stone as far as that's concerned, but it is something we're keeping an eye on. So it's our suggestion where you kind of keep your eyes open. For all of our elite members, we've shared with you where we recommend you go ahead and get in as far as that's concerned. And yeah, guys, that is the webinar. Thank you for all of the wonderful questions from all of our subscribers here on YouTube. And of course, all of our elite members. You guys are the best. We really appreciate it. And guys, we will see you in the market on Monday.